Hello and welcome to Business Incorporated live on Channels Television. Was the final trading day of the first quarter of 2026. The markets are still buzzing. Here's what's coming up. And first we ask, is xenophobia quietly becoming one of the biggest threats to Africa's growth story beyond inflation, debt, and global shocks? Botswana's economy contracts sharply, shrinking 5.4% in Q4 2025. The culprit, a slowdown in mining. Plus, Angola moves to buy back roughly $490 million of its 2028 bonds. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets. Now, we've seen oil prices. They've swung from volatile trading today as traders assess President Donald Trump's reported statements on ending the war in Iran. President Trump told his aides that he was willing to end U.S. operations against Iran, even if the Strait of Hormuz remained shut, as forcing Tehran to reopen the oil choke point could extend the conflict. We see the Wall Street Journal, that's also, they reported that earlier, and definitely we're seeing the impact right there. And that's also, getting into the metals market at this point, with spot silver gaining about 2.72%. Platinum 0.22% higher, 0.69% for palladium. Just copper there, the lone laggard there, down marginally by about 5 basis points. Now we see spot gold up 0.48%. So technically we're seeing oil and metal rise today. Also, yesterday definitely was a different picture, weeks before now. Brent crude, $115, 2.50% higher. Breaking past $114 per barrel. Now we see WTI now making above $100 a new home for that price there. 1.83% higher for WTI, and natural gas moving in the opposite direction again at $2.84, 1.45% lower. So that's the picture right there in the energy market. So other stories now. Angola, they've just announced a move to buy back about $490 million of its 2028 sovereign bonds, a step aimed at managing its external debt while shoring up investor confidence. The government's tender offer targets a significant portion of this Eurobond tranche, suggesting a strategic repayment ahead of maturity that could ease refinancing pressures and signal financial discipline to global markets. The outcome will be watched closely by investors and rating agencies alike. And Botswana's economy contracted sharply by 5.4% in the fourth quarter of 2025, reversing earlier growth as a deep slump in the mining sector, especially diamonds, dragged output down. A drop highlights how reliant the country remains on mining and raises questions about its economic resilience and diversification efforts going forward. And we see the African Export-Import Bank, they've just secured its largest ever syndicated loan, raising $2 billion in a 3-year dual tranche facility, a major vote of confidence from global lenders in Africa's financial institutions and trade finance prospects. The funds will help the bank refinance existing debt and support its broader mandate of expanding trade and investment across the continent, a boost for markets watching African capital flows and credit access. And the South African rand is set for a 7% monthly drop against the dollar, definitely on the back of what we've seen play out right there with metals. The metals market, it's poised to drop about 7% against the dollar in this month amid, broader investor flights to safe haven assets as geopolitical tension, especially in the Middle East conflict, that's driving market volatility and a stronger dollar. Analysts say this sustained pressure reflects risk aversion and rising oil prices, which add inflationary strain on South Africa's import-dependent economy. Meanwhile, also in South Africa, more than 10 vehicles have been set alight during a protest in East London, South Africa, as tensions flared over the controversial coronation of a self-proclaimed Nigerian king. The demonstration, led by various community groups and traditional leaders, initially began peacefully, but later descended into violence amid unverified reports that a protester had been stabbed. Police moved in to disperse the crowd, firing rubber bullets. Authorities say they have not confirmed the alleged stabbing, and at this stage, No injuries have been officially reported. So definitely we're still following up with reports coming right there from South Africa, which leads us into our first conversation now. Joining me is Shane Cooper, head of digital advisory at Forvis Mazars. He's joining me from Johannesburg. We'll touch on the risk associated with xenophobia for economic integration in Africa and other issues around artificial intelligence. Great to have you on the show, sir.
Good afternoon, and thank you very much for having me. It's great to be with you.
Fantastic. So before we get into artificial intelligence, looking at what's playing out in South Africa right now and, the issues around xenophobia, what does this mean for AfCFTA? Can intra-Africa trade really scale, under these kind of tensions?
It's a very good question. And look, I may not be a trade economist. I would certainly argue that if I focus on where my value sits, one of the most important parts about making this a successful opportunity for the continent is to ensure that there is confidence in the system. I would argue that there needs to be closer alignment on how we deploy digital capabilities across the continent. Clearly, xenophobia, as you have highlighted, remains an issue. And I think organizations and our countries need to work better together to ensure that we have a better relationship, to ensure that we take full advantage of what's available to us.
Right, and we keep talking here in Africa about attracting more capital, foreign direct investment, FPI and all of that. But could this push African capital to leave Africa altogether?
Yeah, look, I think one thing is clear is that periods of uncertainty can make capital more defensive. I don't think there's a debate about that. But I don't think that the right conclusion is therefore that capital will leave Africa. I think the stronger conclusion is that Africa needs to become easier to invest in, easier to trade across, and easier to scale within. And for me, the answer there is better regional integration, better governance, and of course, a better visibility into where the risks are.
Now, definitely, we're hoping things settle right there in South Africa. We'll definitely be getting more updates from there. But let's pivot now to artificial intelligence. The reports, some companies are ditching, long-term software contracts for shorter ones because they're, adopting, more affordable AI solutions at this point. So there's clearly strong confidence in AI adoption. But I've read your article. It seems you argue that readiness may be overstated. Where exactly are organizations falling short here?
Yeah, look, I think what we're seeing is that quite often enthusiasm is mistaken for readiness. There are some pilots that have been deployed. You've had some demos from vendors, and there's general executive excitement, but that's not always the same as being ready for scaling AI safely and profitably. And the real challenge very often is whether there has been a rigorous process that has been undertaken to identify which areas of the business are you looking to deploy artificial intelligence. In other words, are you clear about which use cases you are looking to solve for? That's one. And then two, once you have begun your deployment processes, are you very strict and rigorous around managing that deployment? And the classic adage always applies here is that you can't manage what you can't measure. Exactly.
Good one there. But what should boards and executives be critically assessing, in 2026 to ensure their AI investments are not just hype? We've had issues around, some investors, looking at some of these companies and how much they're looking to spend on AI, and those amounts are humongous.
Yes, and I would argue that boards have a significant responsibility here. They need to test AI in the same way that you test any material business capability. And normally the first question is strategic. So what business outcomes are you looking to achieve? And if AI is not tied to revenue growth, cost reduction, risk management, customer experience, or speed of execution, then it's probably just theater. And theater is a real risk with AI, because I think we all accept that the hype around the world is material. And I think the second question is, as I alluded to earlier, is around use case discipline. So are we prioritizing a small number of high value use cases. You should not be frittering around the edges. You'll be wasting money. You need to target the high value use cases, and you need to make sure that you apply significant rigor in ensuring that the deployments are successful. And I think the last thing I would cover, quite apart perhaps from the classic challenges of humans being afraid of what the technology is going to do for their jobs, is around the understanding of whether your data and your infrastructure is good enough. Artificial intelligence is not going to solve poor data. You still need to deal with the challenges of rubbish in, rubbish out. So the traditional disciplines of digital transformation are still very much relevant in the AI world.
Thank you so much for that. But for companies looking to scale AI responsibly, what are the key building blocks? Especially when it comes to data integrity and cyber security, especially governance.
Yeah, absolutely. I think for us, what we're clear on is that the building blocks that matter, and the first one is around strategic clarity. You must know where your AI is being applied and why. Simple deployments of AI tools across the organization without critical oversight is a recipe for disaster. The second one is data integrity. If the underlying data is poor or fragmented, you will have challenges. The third one is governance. So, clarity around whether there are policies in place, defined accountabilities, risk thresholds. Those are classic traditional concepts that still are still very meaningful in an organization. The fourth one is cybersecurity and resilience. I mean, in no conversation around digital is worth having if you don't cover cybersecurity. You need to be very clear around where your attack surfaces are and how you're dealing with that. And then I think, for me, probably the trickiest one here is around people and adoption. You still very much are dealing with classic change management with the deployment of artificial intelligence, and I think more so than ever, because what we're seeing here is a tool that you're bringing into an organization that, for all intents and purposes, can feel as a risk to the knowledge worker. And if you think about most organizations around the world, there is normally a significant number of knowledge workers in those organizations, and resistance to change is material.
All right, thank you so much. It was great having you. Shane Cooper, Head of Digital Advisory for Mazars. Thank you.
Thank you very much.
All right, now let's look at another conversation at this point. We're looking at the seafood market. According to Financial Derivatives Company, in March 2026, the price of a paint bucket of medium-sized frozen prawns in Lagos, that has dropped by about 28% to 16,000 naira, down from roughly about 22,300 naira per paint bucket. That was in March 2025. And definitely when we talk about, most of these commodities, they're always on the up and up. But now we're seeing a downward trend there. Let's talk to Toju Megasin now, analyst with Financial Derivatives Company. Great to have you. Toju, so, definitely we're always talking about these commodities and the prices have been going up. But finally, we have something going down. What are the factors driving this decline?
Good afternoon, Larry. Thanks for having me. Yes, you're totally correct. In recent time, we've seen the price of prawns decline by 28% year on year, from trading at 22,300 and is now selling in the market for 16,000. This can be attributed, or this fall can be attributed to an increase in import supply in the country, as we've experienced and seen more and more frozen prawns being imported into Nigeria from other regions. This then leads to an increase in competition in the market, as well as putting pressure on wholesale and retail prices domestically. Alongside this, domestic traders are also having an experience with gaining more and larger shipments and more frequent shipments with respect to prawns, which is obviously increasing the supply in total. Ultimately, that leads to increase in supply in general in the whole market, which has then led to putting this oversupply has then obviously led to traders then discounting their prices, especially during periods where there's low demand for prawns, as prawns are known to be a highly perishable good. So there's a need for them to be maintained and to be frozen in order for them to be ate safely.
Okay, so
in the short term now, what I do expect, I expect this trend to continue as long as the Naira remains relatively stable. So that's going to obviously encourage more importation into the country.
All right, so looking at the global stage is expected to get more supply. That's according to data, more supply into that global market. How's Nigeria doing when it comes to production? Are we stepping up there?
Yes, we are. We're actually one of the top producing countries we are the top producing country in Africa. But Nigeria, we can always do better. So we can do better by investing in large-scale commercial prawn farms we could do this by investing with controlled water feeding and also disease management systems. Alongside this, we can combine this with also improving and strengthening our cold chain infrastructure by building and maintaining refrigerated transport, storage, as well as blast freezing facilities in order to improve our export hygiene and quality in order to meet international standards.
Right. Thank you so much, Toju, there for the update, and definitely hope we get more commodities coming down in price. Thank you.
Thank you for having me.
All right, let's flip over to the markets now. Trading on the continent, we see the NGX holding on to 200,000 points level, about 0.04% down. So for this last trading day of this quarter and the month of March, I would see Johannesburg Stock Exchange there doing much better. It's been under pressure most of March, 0.98%. Trying to maybe end with some green at this point. For the NGX, just about 4 basis points down. Maybe this is giving us direction on what to expect at the close of trade today. Let's flip over now to the EGX30, North Africa, looking better at this point, 0.90%, even though that's been under pressure with most of the Gulf indexes so far. But we also see some easing there when it comes to this final trading day of the quarter. For the Nairobi Stock Exchange, did close in the red yesterday, about 5 basis points, 195,000, still below 200 points. That's 195 points. All right, flip over to the Gulf region now. Most Gulf markets inch higher in early trading today as investors. They've weighed the possibility of U.S. President Donald Trump, ending, the Iran war. Even though it's marginal in the green, marginally in the green there. 1 basis point, that's for the Abu Dhabi index. Dubai, on the flip side, that's lower, but still quite volatile at this point. Could be green at this point. Tadawul, strongly in a green, 11,263 points, and the Qatari index, big at 0.93%. Advanced there, and oil prices staying higher, and Saudi Aramco adding to this gain we see for the Tadawul there, up 0.86%. Flip over to the futures market now. We see stock futures they're higher after a new report that's offering investors hope that the U.S.-Iran war could soon come to an end, and we also see some reprieve there. The Dow Jones Industrial Average there for the futures market 0.64% higher. The tech-heavy Nasdaq 0.48%, 23,249 points in the green. Let's get a check on Asia Pacific now. The markets there mostly fell as oil prices, that saw some choppy trading, after their report there. Then we see the Nikkei 1.58% close, but a bigger drop for the Kospi. Yeah, we're used to big swings with the Kospi now, 4.26% to close. The Hang Seng Index 0.15%. Flip over now to the Nifty 50. Big drop there, 2.14%. No relief there, 22,331 points, moving further away from the 25,000 level. I guess this might have entered correction at this point, talking about the Nifty 50. Let's move over to Berlin now. We have Varda Imrach right there. Great to have you, Varda. So we're seeing, the talk about correction, in most of these markets. What are we seeing for this final trading day of this quarter?
the DAX is finally rising. So all is good on this side of the world again. It closed yesterday in the green, opened today in the green. Currently, it's with 0.94% gains. You know, there are some winners like defense company Rheinmetall and the Commerzbank are leading these gains. You know, like you said, the U.S. president signaling an end, temporary or not, to the war on Iran has spread optimism in the markets. But not all that glitters is gold. This morning, new inflation data from the Eurozone is already sparking much concern here. Europe's inflation rate was at 2.5%. Energy prices increased 4.9% in March compared to a 3.1% decline last month. So lots of moving parts impacting the markets here.
Yeah, definitely lots of moving parts. But let's look at ties now with most countries. See, Germany, they found themselves in a tight spot between the U.S. and China, and they cannot afford to, decouple itself from either. Now, trade and, ties, that's on the front burner right now. How do you think the country is, navigating this issue?
Yeah, you're right. You know, Germany is very much reliant on both the U.S. and China. And here's the proof in numbers. You know, in 2025, the U.S. was Germany's biggest client and the top export destination. And Germany imports the most from China. Now, this is according to the German Bureau of Statistics. So really, the German economy depends greatly on these two countries. And a new study by the University of Sussex has mapped out the exposure in production supply chains of DAX and MDAX listed companies, and found that much of German industry is tied up with the U.S. and China. For example, let's take Siemens. You know, it's Germany's largest conglomerate and leans heavily into the U.S. market. 24% of its revenue comes from there. Now, the same company gets 12% of its revenue from China, and almost a fifth of its suppliers are also based in the Southeast Asian country. Another example, BMW. The same study finds BMW earns more from China than from the U.S., and a lot of its manufacturing is also currently based in China. The study concluded that basically companies such as these will have really no viable decoupling path that won't result in massive losses.
So if we move away, from the big names, is that true for the famed Mittelstand or mid-sized businesses in Germany as well?
Yeah, that's interesting. You know, the German Mittelstand or mid-sized companies, like you said, are famously what keep this economy afloat, even if big names are struggling. And it's true that many of these companies do fit into the export-heavy sectors, automotive. Many of the suppliers are mid-sized. Another is mechanical engineering, electrical equipment, chemicals. These are all sectors where you'll find tons of mid-sized companies. And as they're kind of export-heavy, they do rely on China. Now, according to the Bundesbank, 1 in 2 German manufacturing firms, many of these are mid-sized, are directly or indirectly sourcing critical materials from China. Now, it's interesting to note that unlike the DAX companies that we talked about, many Mittelstand firms do not have large direct sales in China or even in the U.S. You know, in 2024, only 10% of Germany's mid-sized companies said they operate in international competition, meaning their exposure, thankfully, is limited.
Yes, so much to unpack there, and hope these little businesses there stand to gain, from whichever direction Germany goes with these two countries. Thank you so much for the update, Vanda. Thank you.
Thank you, Laddie.
And now let's flip over to other markets. Now let's see what's playing out in the crypto, and it's red on the screen. Majorly, at this point, Bitcoin was trying to make a comeback. 66,728, 1.65% lower, and major currencies, there's altcoins on CoinMarketCap, majorly in the red now. So I guess crypto markets not getting any reprieve at this point for this final trading day of this quarter. And we see for some of the greens there, mostly stable coins at this point, a few pockets, very, very few pockets of green there, showing you investor sentiment right there. So it's the shorts. The shorts are having it right there in the market. Let's look at some top stories now. Nakamoto Inc., a Nasdaq-listed Bitcoin treasury firm, they've reduced their crypto holdings after selling approximately 284 Bitcoin in March. They sold that for about $20 million, according to its latest 10K filing that we see in early March. Kyrgyzstan stunned Europe by announcing plans to take the European Union to court. The move came days after the EU threatened to ban exports of sensitive dual-use goods to the Central Asian nation, citing concerns over potential re-exports to Russia. Kyrgyz officials slammed the proposal, warning it could tarnish the country's reputation as Central Asia's most law-abiding, Western-friendly states there. So, yeah, we'll see that's busting some of the crypto currency empires right there. Then the UK government, they've announced they will ban cryptocurrency donations to political parties, with Prime Minister Keir Starmer stating the measure is necessary to prevent illicit funds from entering the political system through the anonymity inherent in crypto transactions. So those are some of the top stories right there in the crypto world. And definitely, I hope your portfolio might be doing much better today and you have direction going into this second quarter of 2026. Thanks for watching Business Incorporated today. I'm Ladi Williams. Bye for now.